So you've probably heard the term Dow Jones tossed around on the news, like, the Dow is up 300 points today. But what does that actually mean? Let's break it down in plain English. The Dow Jones Industrial Average, or just the Dow, is basically a score. Think of it like the scoreboard for how some of the biggest companies in the US are doing, and by extension, how the US economy might be doing too. It tracks 30 major companies, most of them household names. Think Apple, McDonald's, Microsoft, Coca-Cola. Not just tech, but a mix from different industries. The idea is, if these 30 giants are doing well, chances are the broader economy is doing okay too. But here's something that surprises a lot of people. The Dow isn't a list of the biggest 30 companies. And it's not even based on their total value. Instead, it's what's called a price-weighted index. That means companies with higher stock prices have more influence on the Dow's movement. So if a $400 per share stock moves a little, it affects the Dow more than a $40 stock moving a lot. Kinda weird, right? This also means a company's stock split, like if a $400 stock splits into 4 $100 shares, can change its influence on the Dow, even though the company itself hasn't changed. So, who decides which 30 companies make the cut? That job goes to a small committee at a company called S&P Dow Jones Indices. They swap companies in and out from time to time. For example, they removed General Electric, one of the original members, a few years ago, and replaced it with newer players like Salesforce. Okay, so now you're probably wondering, why do people care about the Dow so much? Well, it's been around for over a century, since 1896 actually. So it's familiar. It's like the OG of stock market indexes. Even though there are more modern and arguably better indicators, like the S&P 500, the Dow sticks around because it's iconic. It's what a lot of people still reference when they talk about the market. But it's not perfect. Because it only tracks 30 companies, and because of how it's calculated, the Dow isn't always the best snapshot of the whole economy or market. A big move in one high-priced stock can make it look like the market is soaring or crashing, even if most other stocks are chill. Still, it gives us a general idea of the market's mood. If the Dow is going up, it usually means investors are feeling confident. If it's dropping, people might be worried, maybe about inflation, interest rates, or something happening in the world. So, to sum it up, the Dow is a simple way to track how some of America's top companies are doing. It's based on stock prices, not company size. It's not perfect, but it's iconic. And if you want to sound like you know what's going on in the world of finance, keeping an eye on it isn't a bad idea.